So hello guys, welcome back to another charting analysis. Okay, and in this session I'm going to discuss about this trade which I took today, just right now. Okay, and I have taken this trade in the Asian session. I have also taken a trade in the New York session, but I won't be uploading the video about it. Okay, so let's discuss about this trade. So first of all, let me just clear you. I have not been uploading videos for a very long time. It's because I am in right now. I am in a drawdown. Okay, and I'm trying to get out of this drawdown. So I passed phase one, and this account is left at a drawdown. Okay, it's a really deep drawdown. That's why I was not uploading my video, just to preserve my mental capital. Anyways, let's get on to this trade. Okay, so yeah, and let's go on 5 minute time frame. Okay, 15 minutes. Let's go on 15 minutes. Okay, so what we saw that, okay, yesterday this market was gyrating and it broke all of these buy stops, got it, and the market ran higher. So market was running higher and higher and higher. Now I saw a sharp decline in the price. Let's go on 5 minutes. See, my entry and my trading formation, my setup formation, it takes on 5 minute to 15 minute of a time frame. Okay, the time frames more than this, like 30 minute, 1 hour, 4 hour, all of these time frame I use for like calculating the bias and all those things. Okay, now see. Okay, so let's discuss about this on a 5 minute time frame, right? Let me erase all these things. Now the market was gyrating higher and higher and higher. I saw, okay, there is a sharp decline in the price. Okay, plus there's a fair value gap. Can you see these two things? I'll just zoom it out for you. Okay, so the market is gyrating high and there is sharp decline in the price. Okay, got it. Now there is a market structure shift at this point. So if I see, let me just delete all the drawings for you so that you don't get confused. And okay, good. Now see. Okay, so there was a sharp decline in the price, and when the price was declining, it created a fair value gap. So you guys can see this, the fair value gap, right? Okay, so I mark CB by red color and I mark BC by green colors. Okay, now this green color thing, what you're seeing, if you go on a 15-minute time frame, you'll see it is actually found, it is actually acting like order block. So I will want my trades to actually reject from this place. As you can see, when the market fell down, okay, when the market show us a fall, okay, it has taken a support, kind of a support from this point, because there is an order block that is working here right now. Okay, so let's see. Okay, 5 minute, good. Now on a 5 minute time frame, I saw there is a decline in the price, plus there is a fair value gap created. And let's mark the order block. So you can see on a 5 minute time frame, the order block is at this point. Okay, I'll just tell you how did I refine the order blocks. So yeah, so it's an order block, right? And the price fell down. There's a sell side liquidity. I don't know what this fair value gap is called. Okay, so this downward fair value gap is created and the market went down. But what I was confirming, okay, this little bit of this sell side liquidity is not taken. Can you see this sell side and this sell side are exactly equal? Okay, see, I tell you, I didn't wait for this sell side liquidity to be taken. I will tell you why. Okay, now see, the thing is that I want the market to slowly and steadily come back to this particular point. Okay, order block at this point, and I will form my entry somewhat like this. So I'll show you. I'll form my entry if the price comes back to this order block. Okay, right, I'll set my stop loss to be at this high. Can you see this high, this particular white candle, right? If it goes above this white candle, there is no point that the order block will be stopping in them, right? Okay, plus you can see there is a fair value gap which is inverted. So this fair value gap has been inverted. Can you see that? This is an inverted fair value gap. Okay, so yes, inverted fair value gap, inverted fair value gap. Okay, now this thing was an inverted fair value gap. Okay, and I wanted the price to reject from this fair value gap and also touch this inverted fair value gap. So you guys can see this when the price came up. So let's go on a shorter time frame. So on a shorter time frame, I saw, okay, there is this white candle, okay, and there is certain up white candle. So if I make my entry at here, it won't be that much of good thing. Okay, so see, the real order block is being formed at this point. Okay, but because these 2 points are way too stretchy, okay, so I was expecting the market, if it's coming back with so slow, it should actually come at this point. Okay, so now at this point I found my entry. I set a limit order and I found my entry at here, and my stop loss was just at the high of this candle. Okay, so there is this one candle which just broke through it and gave me my entry at this point. But the bad thing about this trade, I'll tell you, is the drawdown is much higher. Can you see 55 something? The trade is actually having that pips. Okay, stop loss. Oh, what is this? It's a long trade, right? Let me have a short trade. Yeah, so at the low of this candle, I was expecting the market reject, and from the high of this thing, okay, I was setting my stop loss. The initial thing which I was targeting is about this. Can you see? I was targeting this initial sell side liquidity, but as soon as on a 1 minute time frame, my entry got filled, right? At this point, my entry got filled and it showed me a sudden rejection. Okay, now when I compared from now, this is how you manage your trades. Let me show you. You have taken a trade, but how do you trail your stop losses properly? That is what I'm trying to show you. Okay, now see, if my order is filled here right now, okay, now suppose if the market tries to come back above it, there is no point the price will sustain this. Okay, there is no point the price will sustain this thing. Okay, so exactly as soon as the price got hit, I set my stop loss exactly at the high of this candle. Okay, got it. So this is the way how I reduced my stop loss immediately. Got it. And now I know, because the rejection was so sudden, there's a fair value gap created and there is another fair value gap created. So there is a fair value gap that has been inverted in here. Now the market was trying to go up, and then there is sudden rejection. That's it. Now when I saw this again, when I saw sudden rejection, it means like it's safer to get my stop loss above this point. Why? Because if it takes this high, this order block is not going to work, so it is going to take this high, so there's no point it will sustain below this point. Got it? That's how you manage your entry. So initially I'll say this is the optimum stop loss. Okay, now let's see. So the market was going and going, and let me tell you one thing about the Asian session. Okay, see, ICT says that Asian session and all these things should be fixed according to Eastern time. It's I think in my opinion it's right about the New York session and it's right about the London session, but when it comes to Asian session, because most of the Asian countries you will see they do not utilize daylight savings time, and that is the reason I have shifted my EST time of Asian session from 20 to 22. Earlier it was I think 19 to 21. Okay, 19 o'clock to 21 o'clock. Got it? And that is the reason I shifted. Now let's see why I have not taken full trade to this sell side liquidity. And you still know, you can see the sell side liquidity has not been taken. But why? Let me tell you why. First of all, the first thing is that, can you see, there is a kind of support, or maybe if you see on a 15-minute time, which I talked about, this is an order block, down close candle, and these are high and open of the order block. Got it? And that is the reason I was expecting a rejection from that point. Got it? So as I was expecting a rejection, this is the first point. I don't want the sell side liquidities. I have less confirmation whether the sell side liquidities will be taken or not. And as you can see, it has not been taken out right now. So let's go on a 1 minute time frame how I was managing my trade. Now let me tell you what is my rule. As soon as the kill zone ends, I will set my trailing stop loss very tight. So if the market wants to take me out, it will take me out, right? If the market wants to make me there, it will make me stay there. Got it? But because of too much rejection, all those things, I was like, let's take this because this is the low. This low was taken out, or actually this low was taken out. So I was not expecting the market to further take up. Let me tell you why. So that is the exact point where I left off all my trades. Okay. Okay, got it. This is around 3.61. Effectively, I will say 3. Okay, because we have some stop losses over this point. Okay, so I'll not say 3.61, but I'll say 3.6. Got it? So let me set this around here. Got it? So 2.5 is a good trade. Now let me tell you why. So at this point I saw this market, okay, and it broke down, okay, and it rejected from this order long. I was like, let's take my entry out there. I do not care what happens later on. Okay, now see, it went a little below, but it didn't take out this sell side liquidity. Let me tell you why I have less confirmation, because this sell side liquidity, okay, you guys can see this liquidity is taken by this liquidity. So a low which is actually a run on the another low, okay, it has less chance of being taken out. Now that is the reason I took my trade out here. Okay, I was not waiting for the market to show me any kind of extra trades. Actually I took out at this point. Got it? So after this one, can you see why I say when the kill zone ends, you set your stop loss very thick, very thin actually. Okay, so suppose I was setting my stop loss, okay, at this point, now at this point, then at this point, because the kill zone has not ended. But as soon as this kill zone ends, at this, you can see this violet line here, it tells you about the kill zone timing. Got it? Asian kill zone. And this this is the London close, this is the New York. Okay, got it? Now as soon as the kill zone ends, just set your stop loss or trailing stop loss very thin. So I would have set at this point. Suppose I would have set at this point, okay, because the kill zone was near. Okay, the kill zone was about to end. Okay, so I was like, let us set the stop loss at this point. Okay, so I set the stop loss at this point, and yes, it would have taken me out of this trade, but with extra time. But eventually I got out of the trade early. So that is the explanation for the trade which I took and how I managed it. Okay, and basically I am journaling all the trades which I take. Here the journaling of all the trades which I take. Okay, so like around there are 50 trades which I have taken till now. See, I need to collect data for 200 to 300 trades just for me to confirm what kind of trader I am, what is my win percentage, what is my risk reward, and all those things. Okay, take care. See ya. Bye bye. Have a nice day. That's it, guys.